What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is February 5th of 2020. Well, folks, I hope you all are having a fantastic day wherever you are, and in today's video, we've got a wide range of topics to focus on. We're obviously going to be taking a look at crypto markets, which have again continued to show strength not only in Bitcoin, but the broader altcoin space, and along with that as well, we'll be talking about equity markets, talking about the craze of Tesla stock over the last few weeks, why I'm not FOMOing in, and outside of that as well, why equities have continued to charge forward with the continued scare of the coronavirus. So we've got a lot of things to discuss right after our quick sponsor. Our sponsor for today's episode is TaxBit. The IRS recently released new forms in 2019 that require all taxpayers to attest to whether or not they traded cryptocurrencies, no matter if they made gains or losses. TaxBit automates your cryptocurrency taxes, enabling you to effortlessly track, calculate, and report your transactions. Easily connect your exchanges to securely sync your transactions and run them through TaxBit's tax engine. Generate your completed tax forms with a single click. Founded by tax attorneys and CPAs, TaxBit is the most trusted cryptocurrency tax solution. Get 10% off your tax plan today with a free trial using promo code DATADASH. Alrighty, everyone, so taking a look across the board here for cryptocurrency markets, we can not only see Bitcoin is up 3%, but the vast majority of cryptocurrencies are on an uptick right now, with a few exceptions down in the red. Again, we can see here most cryptocurrencies picking up and a good amount of plays, again, outpacing Bitcoin here. A variety of mid caps, large plays like Bitcoin Cash, NEO, EOS, Dash, Cardano, you name it, right? There's a lot of different plays here. And even XRP ticking up, which we'll talk about here in just a bit, is a kind of key sign for momentum in this case, and also the long-term logarithmic chart signaling that we might be up for the next altcoin cycle. Now, again, guys, I'm not going to try to beat a dead horse here. I don't really like to analyze the market too much on a daily time frame or any shorter time frame, so we're not going to be doing that today outside of just taking a moment here to look at the daily. As you can see here, continued higher lows and higher highs. This is exactly what we want to see. In fact, we got to pull back down here to a previous support range. Now it's a matter of getting back up here above 10,000 and being able to have a solid breakout. Again, starting to chart back to territory we were used to back here. Remember, it didn't take us very long once we got past 10K, a big psychological barrier in order to get up here to 13,000 and 14,000. So this is where the momentum can really kick in. Again, I don't think it'd be happening in a week like it did probably back here, but I think that, again, we're going to start to see a lot more confidence come in and a little bit more FOMO. There's still a bunch of people who waited for 6,000, 5,000, 3,000, you name it, right? So that's what happens is you tend to get those buyers coming in. Not to mention you've got a lot of people starting to prepare for the halving event, things of that sort. But again, definitely not priced in on mass and stuff. We're again I think some people had a good laugh from our last video where I said we are an anomaly. I should make a t-shirt for that. But we are an anomaly in the sense of understanding Bitcoin's supply schedule in that case. And or you could say probably we're a minority in this case, right? You know, I'm very weird with how I use words sometimes, I'll be fair. But you guys get the gist, right? But anyways, again, market's looking strong here outside of a paused week here where we're having again a nice continuation here after a nice base that we built here. Actually, it's a 6-week bottom that we built. Now, I want to talk a little bit here about, of course, Bitcoin dominance. Again, don't want to be too repetitive. Again, we're very much on our pace for our 7th week here to the downside. Again, we have not seen this since all the way back. I think this is actually the last time we had a consistent 7 weeks of downside was all the way back here in 2014. Pretty wild. Now, of course, the decline here is not dramatically significant as what we saw over here, right? So I think this shows us we're having a slow but steady altcoin cycle here. And it's coming a little bit prematurely as well, which is why I don't think it's outpacing as Bitcoin goes up. We're not seeing a mass decline here in Bitcoin dominance because Bitcoin's keeping up pretty well. And again, it's only a few key players that are really taking up market dominance here. Now, speaking of some of about those specific players, we already know a lot of my plays here that I've talked about, guys. Some of the large cap plays like Ethereum, but also a lot of the small cap plays like Chainlink, Basic Attention Token, Kyber Network, Ravencoin, Engine as well. It's been doing really well. But I want to go ahead and talk about one of the more well-known plays, the third largest cryptocurrency that's seen as a very clear momentum play, and that's XRP, right? We've talked a lot about XRP in the past, and you know whether or not you're a fan of XRP or not. A really interesting question here to ask is whether or not we're seeing enough significant price action to get excessively bullish to see whether or not this is a sign of an altcoin cycle. Some people have talked about it. A lot of the headlines are ringing. Well, just taking a look at the weekly here, I'll tell you that, again, we're taking a look at Poloniex, so the volume's not going to be there. We'll take a look at Binance's volume in a second. But just simply looking at price, right? This is a range where I feel there is favorable risk to reward but I don't see momentum. Right? Just not yet, right? I'm not going to wait until it gets up here, right? But at the same time, we still haven't even gotten past the previous highs here back in October. And I don't see that kind of rush of momentum yet. Now, let's go ahead and take a look at the volume here. Again, just to kind of be fair, volume on Binance, not bad, but not breakout volume, right? If you take a look at the daily here, again, with each of these rallies, it's the same thing we stressed in cannabis markets, guys. I know there's been a lot of people, they see 10 or 20% moves off the lows and like, oh my God, I missed out, right? And people feel like there's no hope, and then they got a FOMO in, and they got to pray that it's going to keep on climbing. And in many cases, it just fades out like this. I'm not criticizing XRP on a technological basis. I know there's some people out there who like it. There's also a lot of bots out there, whatever it may be. But my point here is that as a trader, I wait for momentum, right? I want to make sure that it's going to hold the trend. I wait for scenarios like this, for example, where we come down, have a correction, and revisit the highs and follow through. And there can still be great trades made here, even though I was patient, because I had the patience to be able to wait for that confidence signal to come in, right? We can see here as well, when you get a double top and you get a rejection, that's not the kind of stuff you see on a full-scale bull market. What I want to see here, really optimally, is what we see here back in these cycles. I'll go ahead and take it to the daily so you can see a little bit on a shorter time frame. I want to see a breakout on volume where, for example, in this candle here, right? This candle outpaced all of the volume for Binance back here during the entire sell-off since the last rally, right? And then after that, we had more volume, price held to the top, and it continued higher. That's the signs I want to see here for a play like XRP. Now, taking a look at the USDT pair, right? This is one of the longest price history lines we have here. Taking a look at the logarithmic chart here, right? You can see the general line of support here, right? Coming across. Again, this is the stuff I want to see because we saw this exactly last time, right? Go ahead and get a trend line here, right? I don't know why my drawings weren't here on Poloniex, but I mean, it's a very simple drawing, guys. It's basically the higher levels of support here over the long term of the USDT pair. And over these past 2 months, we have seen an increase. But the question is it outpacing Bitcoin to a severe degree? Not as much as some of our other altcoin plays. And because of that, I'm not interested in it right yet. But if we do get a very clear breakout above, say, 30 cents, just around this support range or this resistance range here, and then also for the Bitcoin pair, around 3,000 Satoshis, then in that case, I would definitely consider building a short-term position. But bear in mind, guys, the major thing I'm looking for here is not only volume, but I'm looking for momentum, right? And I'm even willing to pay a higher premium on a trade like XRP than where it's at right now. Let's say it's at its bottom already. I'm willing to pay that premium because I know that when I'm entering into the trade that the momentum and the volume in the market is on my side. That's what I look for on these kind of trades, and it makes my risk to reward profile much better than what it would have been before when I'm just basically buying in, right? I like to keep patient with these things. And another thing as well to talk about, just try to get some perspective on this topic because I know many of you have asked me to talk about it. In the case of other views, Mike Novogratz actually believes that XRP is going to underperform this year. And his reasoning is actually pretty fundamental and sound. Whether you're a fan of XRP or not, I don't really care, right? My major thing to talk about here is to explain why Mike believes this and to give you his point of perspective. So Mike brings up this issue, and he's done traditional investing for years, running multiple funds, and he brings up this point about how XRP has been doing mass dilution of its tokens, and it's basically been either granting large amounts of XRP to certain commercial bank partners, or has been selling off a lot of XRP OTC in order to raise capital for Ripple Labs. You can see here that there's been over 60 billion coins that they still currently own at the moment. So to really kind of get this in perspective, this is not only an issue in traditional equities. Companies dilute their share basis in order to raise excess capital after they've gone public. But along with that, to talk about the scale of this here, if we're talking about 60 billion coins, and we're talking about a rough market price of anywhere from 25 to 30 cents, it doesn't take a genius to know you're talking about tens of billions of dollars here. So this is something that's definitely concerning to me personally, and I think to a lot of investors out there, that has kept the price from going higher because every single time the price bumps up a little bit, they just basically dilute the coin basis. In this case, they add new coins to the circulating supply, right? So again, I think it's just something that's very important to consider here in this case. It's something as well to consider when we're talking about Bitcoin. There's new issuance of Bitcoin to the miners that causes sell pressure, but at least we know that there's a fixed schedule that's predictable to some degree, and we know that that's declining over time. And the same goes for other things. For example, like Ethereum has its new monetary supply is going to be declining as well in the sense of its inflation rate, and it's fixed to some degree, right? Those are the things that excite people because they can at least have some understanding to some degree, right, when they're building, at least for the people who have built positions so far in the space. All right, so let's go ahead here. Now we're done talking about crypto markets for the day. I want to go ahead and talk about the coronavirus. I want to be short, sweet, and to the point here, guys. Numbers sadly have continued to expand here. Just overnight, we've gone over from 19.7 thousand all the way up to around 23.7. So again, not exactly compounding in this case, but we are definitely picking up pace here. To really, put it in perspective, there was a really interesting, as I mentioned, I sadly forget to bring it up here. It's a New York Times article that showcases kind of the six or seven major facts or kind of important statistics in relation to the coronavirus. And they don't even have the updated numbers here of 23,000, but you can just see the exponential rise compared to SARS, but also bearing in mind as well on a more neutral view, the lower death count in this case. Now, again, I think as much as the next guy, I agree with you guys, the numbers have been fudged to some degree, but I do believe that this is definitely much more the ratio we're seeing here. A 2-to-1 ratio where people are surviving comparative to dying from the coronavirus. And I think that that's honestly, it's a positive trend to see that this number has continued to grow, not the total count of deaths. I like seeing the total recovered has started to outpace the total deaths. And I know, guys, there's probably some number suppression, but we're getting to a point now where the cases are outside of China. We're getting 25 cases in Thailand, 24 in Singapore, 22 in Japan, and this is going to be painting a much more clear picture for those of you who do not trust China on the numbers. I get it. We'll have to wait and see. In order to get real ratios here, we'll have to wait and see what happens in other countries. Again, I would rather these numbers not climb, but it's probably going to climb. But at least it'll paint a picture here to where we can get a much better understanding as to whether or not we should be fearful about this. Now, the good news is a variety of companies across the board and world governments are on a race here to find a cure for it, and I think that that's really exciting. So we'll see what happens. I don't know what that's going to look like. I don't know how fast we'll be able to do it. People have varying different time ranges, but I would say that, again, as this number starts to enter into 6-digit territory where we start to get over 100,000 here over the coming probably 2 or 3 weeks, that's going to be where I'm getting very concerned. So we'll see what happens. Who knows? But one thing I want to talk about is the market response. Market response has been relatively positive. We're getting a rebound across the board here in equities across the world, not only in China, but along with that as well in European European indices, in Japan, in India, all kinds of different major areas across the world, as well as U.S. markets. Now, talking about a parabolic rise or exuberance in equities, we've got to talk about Tesla. And Tesla has been on an absolute tear. Interestingly enough, it's funny. I actually, I basically around, I think it was 190, I started to get bullish on Tesla. I never built a position, to be fair. It doesn't really matter. Again, you could always play in hindsight and stuff, and I don't mean to say that I'm a perfect trader, but I definitely was looking at it as we had support back here. Tesla, ever since that low it set around the low $80 range, has now ticked up to $887, and yesterday was trading slightly below $1,000 at a high of, let's see what the number is, $968. Incredible stuff, guys. Now, what's really caused this? Well, first off, Tesla's had 2 profitable quarters in a row. That's a big shift. And it's a big shift from down here where Tesla, for many people, looked like it was on the verge of potential bankruptcy, huge cash flow issues. There was a lot of financial issues that a lot of people were critical of. But Tesla came out on top, and it produced 2 profitable quarters. Model 3 selling like crazy. They have the China factory launch. They've got all kinds of different partnership announcements and innovations in regards to battery technology. But putting all that aside as well, what really caused the kind of parabolic rise like this, where you're getting this ridiculous price action? It's probably what's known as the greatest short squeeze in history. Tesla was one of the most over-shorted stocks in history. And once we broke past $380, the previous highs here, Armageddon started to set in. People held onto their positions, they kept bleeding, and the shorts continued to get squeezed more and more and more and more as the FOMO has come in as well for Tesla. Now, I want to be very clear here. After looking at the last day of price action here in the last close, actually we'll go ahead and take a look on the 1 minute chart just to show the severity. The sheer drop of nearly $100 per share in a matter of less than 20 minutes. Am I bullish on Tesla stock at these levels? No, I'm not. I love Tesla as a company. I've been a fan of Tesla, where many people have been critical of the company for years. Back, I think probably in 2015, I think 2014, 2015 was when I really started to get eager about Tesla and its technology. It's great to see that the stock has performed, but I wouldn't be buying positions up here. I look at the logarithmic channel here. You don't even need to look at the logarithmic channel. In fact, if you're looking at the standard one, I think it becomes even more clear. It's overvalued. Like, who buys into this? I mean, if we haven't learned anything from Bitcoin, if we haven't learned anything from the cannabis rally, this is an absolute FOMO rally. It's a short squeeze. It's not natural. This is not how price is supposed to move. And I love Tesla as much as the next guy, but it's not fundamentally worth $160 billion. Not yet. Sorry. And I like Tesla as a company, but again, as I mentioned here, even though it's not fundamentally valued there, market cycles can go parabolic, they can get emotional, and they can skew away from rationality, right? But eventually, they will come to much more rational levels. We will have a correction of some sort over the next coming weeks. And I can tell you guys, I'm definitely looking for some add-in position down here, right? I'm definitely looking for Tesla to go anywhere from 400 to 500. Have a 50% pullback, just like it did when it had the last logarithmic rally, right? Made a very nice pull up here to 285. We pulled down here to 140. 50% correction. That's exactly what I look for. So we'll see if it can do that this time around at the big even of 1,000. But again, two quick things to note here in regards to this news. The biggest loser of the week was the Saudis' wealth fund, who got out of their Tesla positions at around 300 before the big exponential rally picked up, and they had a multi-billion-dollar position in Tesla. And the biggest winners are those who bought options in Tesla and have had a over 100x return over the last few weeks. So very interesting stuff. Again, this is options are I think a good tool for risk management. They're not good to put all your funds in this case, guys. Make sure you do your research on options. But call options, put options can be great in this case if you use them properly. Last thing I want to talk about here, and we're talking about this breakout in Tesla, but it's not just Tesla, it's the broader equity market. How have equities in this week of absolute fear come back up and yet again on the NASDAQ set all-time highs? Like, what happened? I thought we were having a crazy world virus that was spreading around at a rapid rate comparative to Ebola and SARS, and it looks like it's something that might be spreading globally and harm a lot of people. What gives? Why are markets doing this? Well, many people don't know, but the Federal Reserve, back about a week ago, had stated that they're going to be turning back and loosening rules in regards to a recessionary rule that was placed in back during 2008 on bank investments. So this rule here is called the Volcker Rule. It's basically a protective rule that states that banks cannot use basically insurance deposits, in this case for individual savings for investments. And this has been a rule to make sure that banks aren't risking the baseline capital that they need to insure people's deposits for investments, right? This is the vast majority of capital that banks are using. It's as if they don't already make enough money lending it out at interest to you and I or all the other different industries where they make a 15% average set of interest on the capital that you have in your deposits, and they still haven't made enough when they pay you literally nothing. So this is the stuff that infuriates me. And I know, this is the stuff, again, where I was at the same time, I always try to understand that there are people at the Fed, and there are people at these institutions who actually mean good, and they just probably don't know what they're doing. But then there's also people, I think, like Powell, or very high up individuals at the Fed, who know exactly what they're doing. They're keeping the punch bowl full. They're trying to get NASDAQ to 10,000. They're going to keep this equity rally going as long as they can. They're using every single tool. And the only tool they have left now is printing more money, lowering interest rates down to 0% or possibly entering into negative territory like the EU and Japan have done. And the third one here is what they're doing now: loosening regulations, loosening reserve ratios, 5% reserve ratios? Why not 0% reserve ratios? It's a party. Let's have fun. It doesn't have to end. That's exactly what the Fed's philosophy is right now. They have prioritized equity markets. They don't care about your purchasing power. They don't care if it means that the price of the goods that you're buying or the home that you need to buy for your family are going to keep going up because it keeps enriching the asset markets. Plain and simple. All right? So sorry for my spiel, but man, this is just infuriates me. Using depositors' money, I mean, that's a good regulation there. I want to know that if I'm putting my money in the bank, that they've at least got some so that I can come withdraw it, right? And when I'm already having to worry about fractional reserves, like, I mean, come on. Like, a run to the bank is already a worry enough. I mean, this is just, it's crazy, guys. It tells me now more than ever the importance of something like Bitcoin, and on a secondary basis, the importance of stable coins. Knowing that I have a token in this case, on a chain in this case, that resembles a one-to-one peg, that there is an absolute reserve backing those stable coins, rather than when I have my money in the bank, and the bank can go and do what it wants with it. It only needs to keep about 2, 5, 10%, depending on the local, state, and federal regulations for reserve ratios. It's crazy stuff, guys. Crazy, crazy stuff. We live in wild times. But if you guys enjoyed this video, please drop a like, leave a comment down below if you have anything to say on these issues, whether you agree or disagree, or maybe you just want to provide an interesting point of perspective or an interesting topic. But I hope you guys are having a great Wednesday wherever you are. And I want to say thank you for joining me as always. But until the next video, I'll see you all in the next one. Stay tuned.